Hey guys, look who it is. It's the gift that keeps on giving. It's Thursday, and you know what that means. It's another great video from yours truly, myself. In this video, I have 3 investments that I believe are top investments that have value currently that will eventually grow over time. These investments are going to continue to appreciate over time. Should you consider these investments? I don't know, should you? I think you should. But I'm honestly not guaranteeing any profit or potential profit from these investments. These investments are up to you and whether you want to make these investments or not. I believe these investments are really good investments, and these investments have a lot of value in them. Now, with that being said, let's get started. So number 1 is land. Land's the only piece or object around the world that does not, and I mean not, depreciate over time. You can buy a car from a dealership right now. The minute you drive that off a lot, automatically depreciates. So if you buy a piece of land today, you are literally buying a piece of earth. So why land, you might ask? There are a few examples about land that I want to talk about, and that's the reason I believe why they hold so much value, because you really never know what's gonna go upon that land in the future or what may be below that land in the future. So if you're thinking about purchasing a piece of land, you want to make sure that it's close to a body of water and utilities, and as well as cities that are growing. That's when you can cash in on your investment if something were to happen in terms of real estate property development on there. Land is the most illiquid form of real estate. What that means is that, let's say you're gonna buy a piece of land. If you don't buy it at the correct location, or you don't do your homework on that piece of land, then it's gonna take you the longest time to sell it. And sometimes you might lose money on your investment by selling that piece of land because you're trying to get rid of it. Number 2, mutual funds. So there are 3 types of mutual funds. There is closed-ended mutual funds, open-ended mutual funds, and exchange trade mutual funds, which are ETFs. Closed-ended mutual funds are limited in shares. That means if a mutual fund is issued, once all the shares sell, that fund is closed. Nobody can invest in it anymore because it's limited supply. But open-ended mutual funds are funds that people can buy shares from and also sell them back to that same fund using the net asset value, which means whatever the price is for that mutual fund that day that you sell it at, that's the price that you're gonna get for the mutual fund. The third one is exchange traded funds, and exchange traded funds are called ETFs as well. These types of funds are traded like stock. So these funds can be traded and sold in the same day, within the same hour, like stocks. So there are 3 key differences in all 3 of those types of funds. And number 1 is the number of shares with closed-ended funds are limited. The number of shares with open-ended funds are unlimited, and the number of shares with ETFs are limited. So after the fund closes, closed-ended funds are traded only with shareholders. So if you're trying to sell some funds in a closed-ended fund, you have to look for another shareholder of those funds and try to sell it to them. Most funds are open-ended. The reason for that is because people are often trying to sell the fund quickly and they're trying to do it by end of day. That's why open-ended funds are much more popular than closed-ended. So why are mutual funds more secure than stock? And the reason for that is stocks are volatile, which means that stocks lose value very quickly and gain value very quickly. The only difference is mutual funds are managed and diversified. They carry many stocks inside of them. Moving on to number 3, and my top investment is number 3. Number 3 is invest in yourself. And that means that if you invest in yourself, you're basically betting on yourself, and you're betting on yourself that you're willing to succeed. You are gonna make something out of yourself, and just imagine yourself as a product that a company is working on, and that product is making enough sales, and then eventually that product stops making sales because it gets boring, a newer product comes along that's more intriguing to people. People start buying that product, they're gonna leave you the product, and your company starts to look for other ways to make you better, add more benefits to you, to bring people to that product and have them purchase it again.